is it different this time?
So thanks, Rich and Juliet, for having me today. Seems to be it's a bit different than what we've seen in 2017. I mean, definitely the economics is different than what we had over there, and the drivers seems to be different. And also, I think that there is just generally less FOMO among the retail investors than we've seen back in 2017, 2018.
Michael, I mean, adoption is key here of not just Bitcoin, but of crypto generally, and also digital wallets in the future, perhaps, too. Now, tell me what you do in terms of linking up these virtual currencies into the financial, how could I say, network of the world, or should I say the financial framework?
Yeah, so we definitely empowered some of the adoption of cryptocurrencies and blockchain-based assets, including Bitcoin. What we basically do, we work with financial institutions, and we essentially help them with, I would say, three main objectives. The first one is to set up a secure custody of those assets. So basically being able to store them securely for themselves or behalf of their clients. The second aspect is actually around the settlement and the movement of those assets for payments and for other type of activities that we facilitate as secure link or secure network between all those institutions. And the third thing that we do, we actually help them to use those technologies to basically issue what we call tokenized assets, but those are essentially assets that are representing real-world assets like fiat currency or securities, and basically bring them into the blockchain in a secure fashion.
Okay, so Michael, I mean, you know, the thing is, you know, you cyber secure these currencies in one sense, but what about the security as a store of value too? Because, I mean, how can these cryptos be actually adopted fully if their prices fluctuate so much as we've been witnessing of late with Bitcoin?
Yeah, so generally speaking, there are basically two distinct forms of cryptocurrencies. There are cryptocurrencies like Bitcoin that they sort of they're a store of value, and essentially if you believe in Bitcoin, it's something that is similar to gold. And then we have other cryptocurrencies, for example, like Ethereum, which is just basically a financial infrastructure that is designed to deploy other real-world assets on top of it. So you can basically think about Ethereum and some of those other cryptocurrencies like Amazon Web Services, which is basically just a financial compute infrastructure that on top of that, you can create assets that are actually not fluctuating. Those are not those are basically real assets like tokenized US dollar or tokenized yuan, or a security that is actually backed by a real security that is issued offline. And you basically use those cryptocurrency networks to represent those assets and to move them efficiently between different financial institutions and retail customers and so on.
Michael, though, as you mentioned there in terms of comparing it to gold, and a lot of people have been saying, is Bitcoin going to replace gold or remain as good as gold in terms of a safe haven? There is still this very big threat that you mentioned there about cyber attacks. How do you kind of answer that as Bitcoin being an alternative to the likes of gold?
Yeah, so similar to gold, actually, Bitcoin is sort of a bearer asset, right? So essentially the one that holds what we call a private key, which is basically just a long password for that wallet, basically controls the asset. And if an entity, an institution, or a retail customer is hacked and hackers are able to gain control, they can basically transfer that assets to their possession. Now, that issue was actually at the base of some of the main issues in terms of adoption of cryptocurrencies and Bitcoin particularly, in the form of do we have a secure custody technology? And for the majority of the evolution of this ecosystem and the asset class, we had those facilities, but they were very cumbersome and very non-accessible. What happened over the last 2 years with companies like Fireblocks is that we actually came with a technology that allows you to do it both in a very secure way and also in a very accessible way to both financial institutions and retail customers. And as our technology is being adopted by all the newcomers into this market, we're actually seeing a fairly secure infrastructure that will enable people to do it.
What I think is interesting is the raft of analyst notes coming through now looking at Bitcoin and other cryptocurrencies as an allocation in their portfolio. There was one yesterday from Bernstein's Inigo Fraser Jenkins saying, look, he's changed his mind from 2018 and now does think perhaps you should have it in your portfolio. Do you expect more of this coming through from the big instos? And I guess in terms of getting it to the retail market, what kind of removal of complexities and costs do we need to see here?
Yeah, so definitely we see more and more of those things, of those analysts coming out and changing their mind. I think JP Morgan did a month ago, and some others, BlackRock as an example. What's really interesting is that actually the regulation, right? So we actually see the regulation being formed, actually specifically in the Asian market. We've seen it in Hong Kong, we've seen it in Singapore, we see it in other jurisdictions that enable or give clarity to financial institutions to basically bring those assets and offer them as an allocation option for either institutional clients or retail, right? We've seen it with PayPal about 2 months ago, and then a month ago when they launched the offering. Now in the US, if you have a PayPal account, at a click of a button, you can buy Bitcoin and basically create an allocation.